What's going on, family? It's your boy All Blue. I'm the good of this credit stuff. In this video, I'm gonna be breaking down why you're actually walking in the bank and getting $500 limits while you could be getting $10 to $15 limits. It's not necessarily about your credit score, it's not about your income, but rather your credit report. It's a secret strategy a lot of people use in order to be able to get high limit credit cards. And it's actually called comparable credit. So in this video, I'm gonna be breaking down exactly how you guys can be able to manufacture anywhere from $25,000 to $50,000. I promise you guys, if you follow these steps, you'll be able to get you guys a higher limit, anywhere from 3 to 4 times the limits that you guys are currently getting. So before we actually jump into this video, I've actually been able to get $60,000 credit limits, $25,000 credit limits, and I've even got upwards of $100,000 for my clients. In the last 3 months, we've actually funded more than $250,000 to our clients. But a couple years ago, I actually had to rebuild my credit, and so I was getting about $1,000, $2,000 limits. Now, this secret strategy I'm gonna share with you guys, right, is really gonna be able to show you guys how to be able to actually leverage your credit so you can walk into any bank confident and knowing you're gonna get the highest limits. So let's get into this video. Before we do, go ahead and make sure to subscribe. We've got new videos coming out daily on banger financial literacy tips that you guys don't want to miss. So let's get into it. So a lot of times whenever people are walking to the bank, right, banks don't lend you based off of your income or even based off your potential. Banks will lend you money based off of what you proved you can handle. So if banks have not seen that you've been able to handle a $5,000 credit limit, they're most likely not going to be able to go ahead and start you off with that. And the most important rule in banking is comparable credit, because banks will always lend you So this is honestly one of the most important rules in banking, right, is that banks will always lend you guys second money. They'll never lend you guys first money. So really what that means is that banks are always going to trust other banks. And so if they haven't seen that you've been able to handle a $1,000 credit limit, you want to be able to prove that you can be able to handle that. Is the more debt you can be able to handle, the more they'll be able to give you guys. The major mistake that I see when a lot of people are building out their credit, right, is that they're using a lot of credit builder accounts. So credit builder accounts are great. The thing you have to realize, right, is that underwriters are really smart, right? They understand there's kickoff, there's self, there's even able finance, right? And a lot of the underwriters, they know exactly how you can be able to apply for them, and they know it doesn't really take much in order to be able to get approved. And so it's not necessarily a bank issued card, right? Like your American Expresses, your Chases, or even your PNCs or Discover. So these banks right here are tier 1 banks. If you get approved with a credit card or a loan, it's going to be held in higher regard compared to a credit builder account. Most of these credit builder accounts, you can simply go ahead and apply without even getting a credit check, and literally anybody can be able to get approved for them. So adding too many credit builder accounts, yeah, it might go ahead and increase your score. It's actually going to hurt your funding later on. So credit builder accounts might help you guys out with the score, but it's going to hurt your funding rounds later on. That's why in order to be able to actually have comparable credit, it's literally go ahead and get secured loans and not necessarily get a lot of credit builder accounts. So you want to be able to get secured loans, right? Secured loans, which a lot of people have heard about them, right? It might have been called the pledge loan. You might have been heard it as the share secured loan. However, it's literally a secured loan. And now what you guys can actually be able to manufacture trade lines on your credit report. Because you got to think about it, right? You can literally have $100,000 saved in your bank account, but if it's not on your credit report, the banks don't know, and they won't be able to go based off of that. They need to be able to see that you actually have the reporting on your credit report. That's why having secure loans is going to be the ultimate way. Because think about it, right? If you have a secure loan compared to a credit builder account, right? Let's say the thing is, most people can be able to qualify for either one, right? Because if you have a secured loan, basically how that works, right, is that you're putting up your own capital in order to be able to secure it. And basically you're going to go ahead and take it to the bank, and the bank will go ahead and report it to your credit report. So a lot of times what happens is a secure loan. Let's say I go to Navy Federal, I go ahead and actually have $2,000. So if I have $2,000, what Navy Federal will do, will go ahead and take that money from my savings account, wrap it up into a loan for a 48-month to an 84-month term, whatever you end up choosing, right? And basically what they'll do is report it on your credit report. So as you start to pay down the loan, and you start to get payment history, and also be able to help you increase your score. But the most important part about having a secure loan, right, is that it's actually issued by a real bank, right? So it's actually issued by a Navy Federal, it's actually issued by a credit union, a Penn Fed, whatever you want to go to, right? So it's issued by these actual credit unions, right, which actually looks really good on your credit report. Because a lot of times, right, whenever you have these secure loans, lenders can't even tell if it's a secure loan or if you got approved for it. So that's really the major hack, because if you have a secure loan, a lot of times the underwriter might just assume that you got approved for it. So if you already got approved for a personal loan, if you already got approved for a loan, and you were able to actually handle this amount of debt, underwriters are going to trust you so much more and be able to get approved for higher limits later on. Now, don't get me wrong, credit builders are great in order to be able to go ahead and get started. But at the end of the day, right, a lot of underwriters, they already know what these credit builder accounts are. And let's be real, they know that people are newly building out their credit journey. They know that people that have these on their credit report have either come from credit repair or they're just going ahead and building credit for the first time. So having credit builder accounts is not going to help you guys. So really, whenever you guys actually get these secure loans, right? So the first step, right, in order to be able to get these secure loans is to find you a credit union that actually does it. Now, there's a lot of different credit unions, a lot of different banks that actually do secure loans, but you have to go ahead and find the specific ones because the thing is, right, the traditional secure loan, if you go to a regular bank that just does regular secure loans, what they'll do, right, is they'll go ahead and take your $2,000. Let's keep the number safe. Instead of you actually just putting up $2,000, now you technically need $4,000 in order to go ahead and pay off that loan because they won't be able to release the funds until the full loan is paid off. Now I'm going to give you guys 3 different credit unions that actually do secure loans in the opposite way. So what they'll actually do, right, is let's say, for example, you go to Navy Federal. So I'm going to mention 3 different credit unions that actually do it a little bit different. So these are the 3 credit unions that I'd honestly go to. Is the first one is Navy Federal, DCU, First State Federal Credit Union. So whenever you go to these credit unions, right, what you'll do is actually put the money into your savings account. So whenever you ask for a secure loan, what they'll do, they'll go ahead and issue you back the $2,000 in your savings account. So now you're not actually at a loss for your $2,000. And literally what you can do is just transfer that $2,000 right back into the loan, and now it's completely paid off. So you don't have to wait until the full loan is paid off, and you don't necessarily have to have double the amount of money in order to be able to pay off a loan. That's why you want to go to these specific credit unions. Let's be honest, who has time to just be sitting there and waiting until the full loan is paid off just in order to be able to get their initial deposit back? I know for sure that I don't. Now, after you go to these credit unions, right, and I'm going to show you guys a secret strategy. So honestly, what I would recommend, right, is that you start off with one credit union. After you go ahead and start off with one credit union, right, what I would do is go to the next credit union and build relationships. In later videos, I'll show you guys why this is important because you want to be able to build with a bank or a credit union before asking for money. So whenever you guys start off the relationship with a secure loan, showing that you guys can pay back the money, it's automatically going to give you guys higher chances in being able to get approved. All right, perfect. So now as far as this strategy, right, with secure loans, you don't want to go ahead and put up $500 or $1,000 limits because, to be honest, that's probably going to defeat the purpose. The whole purpose of the secure loans, right, is to be able to show the bank that you can be able to handle a good amount of money. So any amount you're going to be putting in a secure loan, it has to be $2,500 or more. So it's really not going to make sense, and you're not going to be able to get approved for higher limits. So really how I want to break it down, right, this is a secret hack, right? So because a lot of times, right, whenever you're getting secure loans, a lot of institutions like Navy Federal, they'll lie to be able to go in and stock the secure loans. So really what you want to do is get about 3 different loans all with the same money. So the first loan that you're going to do, right, is going to go ahead and be a $10,000 loan. You guys can really go ahead and liquidate a 0% interest credit card and be able to go and actually put up this capital. So really what we're going to do, right, is take this $10,000, and as soon as we go ahead and actually get this $10,000 into our savings account, we'll go ahead and call the credit union and ask them to go ahead and actually wrap it up in a secure loan. And so as soon as they go ahead and convert it into secure loan, what they'll do is actually give you that $10,000 right back into your savings account. So whenever they actually give you that money right back into your savings account, so before you pay out the first loan, so what you want to do is actually call the credit union back and actually go ahead and take that and take $8,000 and take $8,000 from that $10,000 and wrap it up into another loan. And so what you just did right there is created $18,000 off of just $10,000. Because remember, this is going to get reported onto your credit report, right? So you just created $18,000. But we're still not done, right? Because this is like the first couple of days, right, of you actually having a loan. So we haven't paid back the $10,000 yet. We haven't paid back the $8,000 yet, right? So the next step, right, we're going to take, right, is to call the credit union again and actually take $7,000 out of that $8,000 and actually put it into another secure loan. So really what we did, right, from that $10,000 deposit is create 3 secure loans, all with just having the same amount of money. So right here, after the $10,000 and $8,000, we had $18,000, right? And so afterwards, right, we really have $25,000. And so you guys can see right here, because all of this is going to get reported onto your credit report, right? So really what we did, right, is take $10,000 and turn it into $25,000 of reported trade lines on your credit report. So this is going to be major in being able to go ahead and get approved for higher limits, because when underwriters have seen that you've been able to go ahead and pay off a $10,000 loan, you've been able to pay off an $8,000 loan, you've been able to pay off a $7,000 loan, it's going to look really, really sexy. Because of course, if you guys have more money, you guys can also be able to add this. But I've had a lot of clients with 850 credit score, and all I've told them to do is to go ahead and actually add secure loans. And so really what you want to do, right, is you might be asking yourself, how do I actually pay this off, right? So how you want to pay this off, right, is that you want to pay off the 99. So you want to be able to pay out 99% of the balance within 48 hours. So you want to be able to go ahead and pay off 99% of the balance within 48 hours, right? The reason you want to do this is because it's going to go ahead and completely eliminate the majority of the balance. So whenever it actually shows up on your credit report, it's going to show up as mainly paid off. And the reason we don't pay it fully off, right? Because we want to go ahead and leave that account open so every single month it can start to add positive payment history. Because think about it, right? If you go ahead and get you a secured loan for 48 months, you pay off 99% of the balance the first 48 hours. So when it shows up on your credit report, it's going to show off as 99% paid off. It's going to show every single month, just positive payment history. So it's going to do wonders for your payment history because a lot of accounts, right? Good payment history always starts off at 6 months. So really what you want to do, right, is of course, take all these initial investments, loan 1, loan 2, loan 3, and then pay them all off, right? And so you would go ahead and pay off that $10,000 loan, and it's going to be 99% paid off. They'll go ahead and actually give you that money right back into your savings account. You'll take that money, pay off that $8,000 loan at 99% paid off. They'll actually return that money to your savings account. And now you'll actually go ahead and pay off the final loan at $7,000 and 99% paid off. And really what you'll do, right, is with that credit union, they schedule auto payment. So you should be able to have an auto payment. It's probably going to be like $10 a month every single month, so it can report positive payment history. Really, the main strategy, right, is to go ahead and actually do this right with one credit union, right? And then after you go ahead and finish this up with one credit union, so then you'll actually go to another credit union and just keep on building and building and building. So that way, whenever you guys apply for credit, instead of you getting $500 limits, you can now start off with getting $10,000 limits, because an underwriter is not going to have an issue of being able to get you approved for that limit. It's not going to have the issue of getting you approved for $5,000 to even $10,000 credit card limits, because they've already seen that you can be able to handle $10,000, $8,000, $7,000. So now show up as comparable credit. So stop getting a bunch of credit builder account. Instead, build up your credit the right way with secure loans. I really hope this video is helpful. So make sure you guys go and subscribe. We're always dropping banger videos on credit tips, business tips, and also financial literacy. So that's a wrap for this video. And like always, I'll see you at the top, my boy.